5 car companies that either dedicate themselves to electric or involved in electric. Tesla, Lucid, NIO, Ford, GM. Let's analyze them right now. Again, if you belong to our software, if you're one of the 12,000 people who've signed up for our software, please follow along. Click the 8 pillars tab. First company, Tesla. Tesla is down big time from its all-time high of 1240. It is down currently, as this very second, to 673 and 60 cents. Oh, up 5% today. Wow. All right, let's go to the 8 pillars tab. Oh, all right. Basically, the only thing that's going well here is all the growth numbers. So guys, you might sit there and say, well, Tesla's growing like crazy. I'm going to buy it. So what you're saying then is when you say that is, look, I used to say 20 years ago, well, if it's growing like crazy, I'll buy it. Well, is there a price that's too much? And you might sit there and say, well, of course, the price too much. But really, when you haven't drawn the line somewhere, you're drawing the line nowhere. And that's the problem. We look at Tesla, and one of the metrics I want you to see is the price to sales ratio, 11.2. The average car company sells for less than 1 price to sales ratio. So this is saying 11 times more than the average car company. Now, for those of you out there who say, Paul, Tesla's not a car company, I want you to do me a favor. I want you to turn this video off. I want you to mail me a check with all of your money because you'll be broke anyhow. Because even if you're right on Tesla, you'll be wrong on other things and you'll end up being broke. So you might as well give me the money so I can spend it on hookers and cocaine. All right. But if you do understand that there's such a thing as overpaying and you realize Tesla makes cars and 90% of their revenue is from cars, then please follow along and keep going. There's hope for you. And I'm very happy to have you here. So I'm just going to go right to the stock analyzer tool, guys, because the future Tesla is great, awesome, etc. Till we're blue in the face. They sell about 1 million cars a year. So let's go sit there and see some revenue numbers. Let's go to calculator. Let's do 1.2 to the power of 10, growing 6 times. Okay, let's do 15, 20, and 25% revenue growth in the next 10 years. Profit margin. This 1 year is a fluke. Let's do 5, 8, and 10. Free cash flow. I'm going to end up doing the exact same thing. PE. I'm going to go 15, 18, and 21. For those of you who are going to argue with me about that one, the fact that I'm even giving it 15, 18, and 21 is a miracle of all miracles, and just to show you guys how overpriced it is. And of course, I want a 12.5% return. Hit the analyze button. The stock is worth, on the low side, 80, high side, 424, in the middle, around 200. So if you like any of these prices, click that add to your watch list, notify me, and it'll notify you via text, email, and on the app that the stock has hit. So if you have our software, this is it. Now, you guys I can easily make this thing look like a screaming deal. Let's change the PE to 30, 40, and 50. And guess what's going to happen to the stock price? Oh my God, it's still, by the way, only a good buy on the high end. It's still not a good buy in the middle or low. You have to determine yourself what you view Tesla to be. Just keep in mind one thing. Every major S&P 500 company that you know about at one point was the Tesla of the world. Literally every single major one that was hyped at some point, and they all fell hard. I want to remind you that Amazon was $113 a share back in 2000. It ended up being as low as $6 per share. And that was one of the ones that made it. Microsoft was $50 a share, fell as low as $11 or $12 a share before it finally surged back up again. Overvaluation. Next company, Lucid. Here's the deal about Lucid, guys. I had a Lucid pass me the other day, and it's an effing beautiful vehicle. Even my girlfriend sent me a picture the other day and said, have you seen this car? I'm like, yeah, it's a Lucid. She's like, it's beautiful. Yes, it is. So let's go to Lucid. Let's go to, look at this stock. 52-week high of 57, 52-week low of 13. It's currently at 1689. Let's see the 8 pillars. Not enough data. So guys, I like to analyze companies that have 5 years of data. This company did $27 million a year last year in revenue, and its currently market cap is $28 billion, 334 to 1. I'm going to stop you right there. I'm out. I'm not even looking at it. I don't care what the growth potential is. $28 billion for the company in its current stage. It has to crush it now just to justify that value. I am out. If you want to buy Lucid because you think it's got a future, if you are right, you will be wrong in so many other ways. You will lose a lot of money anyhow. If your logic for buying Lucid is, I'm willing to pay $28 billion for the potential of this company, then you need a lot of electroshock therapy. Third company, NIO. So NIO is the big one in China, right? So their high was $55 or low is 11. They're currently at 19 bucks. 8 pillar tab. Okay. So not as bad as Tesla because Tesla was diluting the hell out of their investors. NIO's not, which is a pretty common thing for foreign companies. But everything else looks terrible. 5-year average free cash flow is a loss of 800 million. They don't even make free cash flow. But let's go in here and do the stock analyzer tool and just see where it falls in terms of let's see what the revenue is. Okay, got it. Let's go to stock analyzer tool. I'm going to do 20, 30. Oh, somebody sent me a message in our chat. 20, 30, and 40% revenue growth. I'm going to do profit margin of 6, 8, and 10. Same with free cash flow. So this assumes that day one, they start making big money. I'm going to do a PE of 20, 25, and 30. Because if they hit these growth numbers, that more than justifies it. But I'm going to put a higher desired return for more margin of safety. Analyze button. All right. This could be a buy if you believe these middle numbers. If you believe these middle numbers, you're buying this thing all day. Because its low is 9, high is 83. It's currently at 19, middle is 30, 28 or 30. Okay. So if you can buy into the story of 25% revenue growth and 25 times earnings and all these other things, just to keep in mind, in 10 years, 25% revenue growth over 10 years is going up 9 times. That would take them $50 billion in revenue. That's not unreasonable, I don't think, for the largest EV maker in China. What could end up being the largest EV maker in China? Okay. So I'm not yay or nay on this one, and this is a growth prospect. It could be potential for it. It sounds interesting. Number 4, Ford. So guys, Ford's killing it on the EV front. Their Ford F-150 is killing it. I think that Mustang SUV is absolutely gorgeous. I see it on the road now a lot more. I actually think it's a good looking car. So let's go to Ford. A high of $26, a low of $11.84. Guys, look at this. Look at Ford. Back in 2000. Today. It's 1/4 the price almost that it was in 2000. Just remember this. This is a big company. You have to buy company. Did Ford go away? No. Somebody here would have said, well, I don't think Ford's going away. For it to go nowhere for 20 years, it just happens. Overvaluation's overvaluation. And we'll look back 20 years from now and look at the stocks that some of these probably Tesla, Lucid, and Neo and say, did you imagine that this would happen? And I would have said, yeah. And I said, watch my videos. By then, 20 years from now, we probably have 8 billion videos out. You have to go search through them, but they're there. Ford's 8 pillars. Oy vey. All right, they got a low PE and a low price of free cash flow. That's a good start. Net income growth. Revenue growth is down, though. Cash flow growth. Let's go to their cash flow. Yeah, their free cash flow it's positive over the last 10 years. Oh, man, look at this revenue. It's stagnant over 10 years. Their profit is only 1 year of loss. It's probably a big write-off. Okay, let's go to the stock analyzer tool. Guys, we're coming off a big year for cars, right? Cars can't stand the lots. You know, I have a good friend of mine who owns a dealership in St. Louis. He was like, he went from probably have 84 cars to 14 cars. Now he says, I have 0 cars. Okay, so is that going to continue forever? Probably not. So I'm going to go 2, 4, 2, 3. Actually, you know, I'm going to go 0 because they did 0 in the last 10 years. 2 and 4% revenue growth. Profit margin, I'm going to do 3, 4, and 5%. I'm going to go 6, 7, and 8. PE, 12, 14, and 16. 12, 14, and 16. And again, 12.5% return. The stock's currently at 12.28. Hit the analyze button. All right. We got a lot of green here. So on the earnings side, it's a range of 9 to 23. And on the free cash flow side, 18 to 37. So if you believe that the free cash flow, the earnings will catch up with free cash flow eventually, this is probably a buy today if you agree with these assumptions above. But remember, car business has a lot more issues than just cash flow. You have to look at the balance sheet. Look, they have a lot of debt, I believe. Let's look at their debt. Yeah, they have 11.5 times their average free cash for the last 5 years. That's a lot. Now, that's a lot of factories. And some people say, well, those factories have value. Sure, but if they have to get rid of those factories, it means cars probably aren't selling. Who's going to buy those factories? So I don't necessarily go based on that. Fifth and final company, GM. Now, I believe Berkshire Hathaway has GM. So again, if you belong to our software, please follow along. A high of $67, a low of $32, and it's currently at $33.24. Big dividend. Now here's the problem with their dividend. It seems high at 4.6%, 183 million. Here are their cash flow numbers, guys. Their cash flow is dog crap. Negative 3.75 last year, negative 7.7. Guys, for a company like GM, income statement. I know they're not even growing. Balance sheet, cash flow statement. I mean, it's negative every freaking year. 8 pillars. Guys, I'm sorry. When it comes to GM, please by all means do your research. I don't even want it. There's way better options out there. Like pretty much any car business out there is better than GM. I understand cash flow. I understand earnings. I don't see the cash flow. The earnings and cash flow don't match. I'm out. If you like this video, click the next one, 10 stocks and when to buy them. Thank you very much.